I welcome you all to 71st session, and it's been our endeavor to do a monthly one session on GST and tech updates. We being finance professionals dealing with the technology day in, day out, not getting upgraded ourselves will actually put us into backseat. Hence, every month we do one session to ensure that all of us are updated and up to date and not outdated on the indirect taxes GST. This being the audit season, I'm sure most of you are busy in finalizing statutory audits and tax audit so that you comply by 30th September. By now, most of the workings could have also been happened. We thought we need to give a quick teaser of the values that you need to report in your tax audits or stat audit reports vis-a-vis what is the angle that from the GST perspective that you need to be looking at. In fact, GST audits, GSTR 9 and 9C are in the corner. Once you file the tax audit and stat audits, everyone would be focusing on finalization of the accounts for GST perspective. So if part of the statutory audit, if this is done, it would serve three purposes. Purpose number one, your statutory and tax audit is corrected in time. Purpose number two, you will have an last opportunity to correct your GSTR 1 and 3B by 30th November or issue of credit note under section 34 accordingly within 30th November. Purpose number three is you are ready for GSTR 99C filing, and their difference, if any, you can be paying it through DRC 03 voluntarily, saving penalty and interest thereon. So it's equally important that we understand there exists a difference between books of accounts from the income tax or the statutory audit perspective vis-a-vis the GST. So today we are going to take a quick, like not a deep discussion about tax audit or statutory audit, but a dipstick of the GST portion in those two elements. And the second half, we will be looking at the power pivots, which is there for quite a while. I still see people using pivots, and this is an endeavor where we migrate people. Instead of using a pivot tables, we need to now start telling everyone to start using power pivots. Is it drastically different? And once we migrate to power pivots, what are the other quick handy tools that are available in Excel? Today we are going to see. We started the series of Power BI. So the DAX reports, which are same in the Power Pivots, I thought we will do the DAX in Power BI so that the touch of Power BI is also not lost. We will try completing the session by 5:30. And the first part of the session is approximately around 1.5 hours. Second part of the session is approximately an hour, and we'll wrap up the session by 5:30. Feel free to ask any questions that you have, and we'll be addressing those questions in the chat. And then you'll also have an opportunity to unmute and ask your questions. In the interest of everyone will get muted as the session begins, but get yourself all the questions be answered and complete the webinar. Our endeavor is always to update the knowledge of the participants and ensure the maximum value they get for each of their participation. On this note, I request the first speaker of today's session, Jagdish, who is my colleague who heads the Vizag office, to address upon the tax audit related implications in GST. Jagdish, over to you.
So can you please give me access?
Yes, Jagdish. Yeah, you can share the screen now.
Yeah. No, sir, even now I'm not able to share my screen, sir.
Try now, Jagdish. What does it say? You should be able to.
Pop-up is coming, sir. Who can share?
Okay, give me a moment. Give us a moment. We'll just address the technical glitch and share the screen.
Yeah, now I'm able to do it, sir.
You're able to?
Yeah.
Oh, no.
No, sir. Again, you only share the screens.
No problem. Can you see the screen now?
Yes, sir.
All right.
Yeah. The agenda of today's session is first we'll discuss about the GST disclosures in the tax audit report, and then we'll discuss some carrier reporting with respect to the GST, and then we'll move on to the reconciliation disclosure part and the GST adjustment entries, and then the end we see the recent updates. Okay, first moving on to the first part, GST disclosure in the tax audit report. Yeah. So tax audit report has a considerable amount of disclosures with respect to the GST. So we'll see clause by clause what are all the disclosures that required to be made in the tax audit report with respect to the GST. First, we'll start with the clause 4. There are total 44 clauses in the tax audit report that is in the form 3CD. Out of 44, GST is having implication on 3 clauses, that is on the clause 4, clause 27A, and a clause 44. That's the last clause. We'll see in detail what are all the details that are required to be furnished in the respective clauses of form 3CD. First, we'll start with the clause 4. In the clause 4, we need to furnish the details of the GST registration. Okay. So in the clause 4, all the GST registration detail we need to furnish in the clause 4. So should all the GST numbers are to be disclosed here? Yes. All the GST registrations taken by an entity across all states, including the ISD registration also, that is input service distributor registration also, we need to furnish in the part A of the form 3CD. And if registration is cancelled in the middle of the year, even then we need to report that GST number in the clause 4 of the form 3CD. So, any number active or obtained during any part of the reporting period to be disclosed under this clause. This is just a basic details we need to, as you all know that in the part A, one of the basic details we need to furnish in the form 3CD. So this is the basic details of the GST we need to furnish. So,
yeah, there was a question that had come up that, okay, will there be a situation where the tax audit is applicable under income tax, but GST is not applicable? The possibility will be there. If someone who is wholly dealing in exempted turnover, there is no obligation for them to register under GST. Also, if someone is dealing wholly in the supply of services or goods where the other person is going to pay taxes, even then they will not be registering. So not necessary that every tax audit cases, at least 90% this would be applicable, but there could be a situation where this would not be applicable also. Please proceed.
yes. Yes. Now coming to the next clause, clause 27A. In this, we need to furnish the whatever the GST amount availed, utilized, and even the carry forward balance we need to report under clause 27A. Though there is no reference of input tax credit in the form 3CD, but in the e-filing utility, there is a wording called the input tax credit under GST. So all SSCs registered under the GST should provide the relevant details in the form 3CD. Mere not there of ITC wordings in the form 3CD. You cannot think that you no need to report the GST details in the form 3CD. Though there is there the wordings are somewhere details we need to furnish in form 3CD and the clause 27A. But in the e-filing utility, there are wordings called GST input tax credit. So while providing the details under 27A, SSC should ensure that details are reconciled with the books and the GST portal. You can provide the details basis on the books, or you can follow the portal also, but you have to provide the details consistently over the years. This year, if you follow the books, then next year also you follow only the books. So, and also you need to furnish the details of the opening balance, that is the carry forward balance from the previous year to this year, and how much ITC you have availed in the current period, and how much ITC you utilized, and the balance carry forward to the next year, that you need to report it here in the clause 27A. Many I seen many tax audit reports that no one is reporting the GST details in the clause 27A. So please make a note of that. Even though tax audit report doesn't contain the wordings of the GST, you need to report GST details in the clause 27A. So I have seen many reports that only clause 4 and clause 44 only GST details are filling. Not only those two clauses, even the clause 27 also, you need to fill those details. How much brought forward ITC is there, and how much ITC you have availed in the current period, and how much ITC you have utilized, and the carry forward balance you need to report here. Okay. So moving on to the next one. Sir, would you like to add anything here, sir? Sir? Yeah. Can you move on to the next slide, sir?
Sorry. Okay. A point here. The people also ask the question that what should be the source of information for providing this? Though the guidance given is use books of accounts or GST portal, but do it consistently. I would always say that report it whatever is there in the books of accounts. However, you still need to do a reconciliation. That is where Ashika would come in the next part, that reconciliation of the books and portal is very much important. If you look at the, let me just share that screen for the clause. Yeah. If you look at it, it talks about amount of value-added tax credits availed, utilized during the period, and its treatment in the profit and loss account and treatment in the value-added tax credit accounts. So the government is definitely want to understand that have you utilized some credits and also parallelly charged off to the P&L. And there could also be a situations where that you have availed the credits and reversed to the P&L owing to Rule 42, a common credit reversal or credit being ineligible under for various reasons. This reconciliation is very much necessary. What is my opening balance? How much of it I am crediting? How much of I am using it? How much I am writing off to P&L? What is the balance that is left? Ideally, this is the value that you should take from the books of accounts. And if you choose to take the value from the electronic credit ledger, you got to maintain the consistency of reporting that value. Yes, Jagdish.
Coming to the clause 44, this is the important clause. So in clause 44, we need to provide the breakup of total expenditure. So We'll see in detail about this clause. First, we need to bifurcate the total expenditure into the two buckets. One is expenditure in respect to entities registered under GST. That is the expenditure, the purchase of goods or services from the registered parties. And the other bucket is expenditure relating to entities registered, not registered under GST. That is purchase of goods or availing services from the non-registered entity. So this bucket, the first one, that is availing services from the registered entities, it needs to be further bifurcated into the three categories. We'll see what are all the three categories. In the clause 3, we need to report all the goods and services which are exempt from the GST. So purchasing of let's say I bought an exempted good from X who is a registered party, and that good is an so I need to report in the table 3. So what is the exempted goods or services under GST, which is as per section 2 subsection 47 of the CGST Act. Exempted goods means those which are attracting nil rate of tax is the exempted goods, and exempted supply includes the non-taxable supply. It means exempted supply includes the non-taxable supply. So what is the if you see the what is meant by the non-taxable supply? For that also, GST has provided the definition. Non-taxable supply means which is not leviable to GST. That is the non-taxable supply. As of now, under non-taxable supply, only two categories are there. That is alcoholic liquor for home consumption. That is the non-taxable supply, and the petroleum product. That those 5 petroleum products. So you all know those HSD, ATF, aviation turbine fuel. All the petroleum products will cover under the non-taxable supply. So in the column 3, we need to furnish all those details, all those expenditure which we have taken from the registered dealer. And in the column 4, if you read the column 4, relating to the entities falling under composition scheme. So what are all the purchases we have made from the composition dealer? You need to report it here in the clause 4. So in the clause 5, the balance figure from the first bucket. First bucket, you have taken all the inward supplies from the registered party, and from that you remove the clause 3 and clause 4. That is exempted supplies and then composition supplies, and remaining figure you put it in the column 5. No, column 6 is nothing but the sum of exempted supply, composition, and the others. Now coming to the clause 7. Clause 7 is the second bucket, what we have discussed in the first. That is all the inward supplies from the unregistered parties we need to report in the clause 7. So sum of yeah. Now sum of clause 6, column 6 and column 7, nothing but the total expenditure. So here, if you see the column 2, here the total expenditure, you have bifurcated it. First, you have bifurcated into 2 parts. That is registered and unregistered. Registered is under 6. Yes, 6. 2 is equal to 6 plus 7. Yes. Yes, sir. So now coming to the applicability. So clause 44 is applicable for all 3CD reports which are issued after 31st March 2022. That is even for the financial year 21-22, it is applicable, and from the last year onwards only it is applicable. So whether the reporting is co-op on or GST invoice. If you see the clause 44, there you need to report on PAN basis, not each GST basis. There is also confusion that whether I need to report the expenditure headwise or as a whole basis. If you see the guidance note issued by the ICA, there it is saying that you need to report there on a consolidated basis. There is no requirement to report on headwise basis. So now coming to the next, even if you see the clause 44, So can you please go back to that clause 44, the previous slide? Yeah. If you see here, total expenditure, this talks about the total expenditure, not the outward supply. Therefore, even if you are not registered under GST, suppose you are engaged. So suppose, yeah, your turnover is let's say 100 crore. You are engaged exclusively in supplying exempted goods or services. Then there is no requirement to get registered under the GST. Even then, if you are not registered also, but for you, tax audit is applicable. So you need to report in the clause 44, even though you are not registered under the GST. Sir, please move on to the next slide. Sir, can you please accept the remote, sir? Hello. Yes. Yes. So this clause 44 is applicable even if the audit is not registered under GST, because here we need to report all the expenditure, not the turnover part, right? So even the SSC is not registered under GST, you are mandatorily to report to furnish the details in the clause 44. So now coming to the next part, applicable even if audit is registered and his entire part income is, these are already discussed. Now, reconciliation of the values reported in the clause 44 with the P&L account. Here, I am saying reconciliation, not matching. Okay, you no need to match the P&L part, total expenditure part, with the details you reported in the clause 44, because it will never match. Because I will explain why it will never match. If you see the previous slide, here it is saying that the total expenditure means both revenue expenditure and the capital expenditure. Whereas in the P&L, you will see only the revenue expenditure part. So you maintain the proper reconciliation to face the future litigations, if any. And handling and reporting of capital account purchase not reported in the P&L, like I discussed just now. So even the capital expenditure, if you purchase from the registered party, you have to report in the 4, 5, 6. If you purchase from the unregistered party, you report it in the column 7. Or even if you have reporting of payment made under the reversal, where I will report here. If suppose I have availed the GTL services from the registered dealer, then whether I need to report in the table 3, 4, 5 or table 7. Yeah. If you see here, the clause 44. Yeah. So you have availed the services from the GTA, who is registered party. Okay. For him, that is an exempted. For him, for the purpose of imported, sorry. So here you have to report it in the relating to the other registered entities only. Okay. Suppose the same service you have availed from the unregistered party, then you have to report in the column 7. Otherwise, it will come under the column 5. Okay. Moving on to the next slide. Yeah. Section 35 of the CGST Act. Let's see what Section 35 talks about. Section 35 talks about the what are all the accounts and records that have to be maintained by the registered person. Okay. Let's see what are all. If you see the Section 35 clause B, it is saying that it is mandating to maintain the inward and outward supply of goods and services are both, and the register of input tax credit availed. So for input tax, we need to maintain the two register as per Section 35. That is inward and outward. That is, in this register, you will have only the total inwards and the total outwards, total outward and the balance. Okay. And in the clause D, it is saying that how much input tax credit you avail, that register you have to maintain. Nowhere in the section 35 it is saying that you have to maintain the register in this format. That is purchasing from the registered party, unregistered party, composition dealer, and reverse. All that bifurcation you don't need to maintain. Just you maintain the register. How much items you have available, only that register is enough under section 35. Whereas in the inward outward register. So nowhere it is mandated to maintain the register to all the details. As we discussed in the form 3CD, clause 44 of the 3CD. Okay. So we'll see. In the clause of it is saying that as such other particulars as may prescribe. If you see the rule 56, it is saying that in addition to the records, accounts as specified in the section 35, you need to, in addition to that, you need to maintain the following records. We'll see what are all those records with respect to the expenditure. Okay, the GST input. So it is asking every registered person other than the composition dealer is required to maintain the input tax credit claim together with the register of the tax invoice received during any tax period. And sub rule 5, it is asking to maintain the complete register with the names and complete address of the suppliers from whom he has received goods or services chargeable to tax. So with the help of this, you can identify the supplier, whether the supplier is a registered, unregistered, composite dealer. You can use this register to fill the form clause 44 of the 3CD. Okay. Okay. So would you like to add anything here, sir?
Nothing, Jagdish, you can proceed.
Okay. Yeah. So what are all the inclusions and exclusions in clause 44? Whether I need to report all the expenditure, what is there in the P&L? No. We'll see what are all the inclusions, what is not there in the P&L, and exclusions. What's there in the P&L? I'm not required to report in the clause 44. First, we'll see the inclusions. Total expenditure to be disclosed. This we already discussed, both the revenue expenditure and the capital expenditure. I need to report in the clause 44. And the non-GST expenditure, such as expenditure on petroleum products, are to be bifurcated under exempted supply, because exempted supply includes non-taxable supply. So that's why even petroleum products are required to report in the clause, in the clause 3 of the, column 3 of clause 44. Okay. Availment of ITC is not the criteria. Whether you have availed the ITC or not, irrespective of that, you have to furnish the details in the clause 44. There, you need to report whether you purchase the goods or services from the registered and unregistered. But whether you have availed the ITC or not is not the criteria to furnish the details in the clause 44. Okay. So now we'll see what are all the exclusions which no need to report in the clause 44. Schedule 3 transactions. So what are all the Schedule 3 transactions? That is sale of land and building, high C sales, salaries, all they need to report in this exclusions part. So and also the notional entries like depreciation, amortization, and provision, bad debts, written off. All the notional entries also. Technically, we cannot anyway we cannot fill those details in the clause 44, and also the notional losses on securities or shares transaction, those are also not required to report. So what are other disclosures in the tax audit report? If you pay any penalties, demands has been paid, don't need to report in the rates and taxes in the ITR. And for this, you may review the form GST DRC 07, PMT 06, and DRC 03 to report the details in the ITR. And review the payments made after the year end to ascertain if any liability at the end of the year is discharged completely or not. And penalty on late payment and interest are to be shown as rates and taxes in the ITR. So now moving on to the next part, that reporting on under CARO. In this, with respect to the GST, two aspects needs to be reported in the paragraph 3. That is, in the paragraph 3, 7A, we need to report the undisputed liabilities, whereas in the B, we need to report the disputed liabilities. So, in the paragraph 3, 7A, with respect to the undisputed liabilities, first we'll see what is the undisputed liability. Undisputed liability means there is a liability and acknowledge that liability, but payment has not been made. Whereas the undisputed liability, department has demanded the liability, but I have not made the payment because I feel that that is not payable. So that's the difference between the undisputed and the disputed. First, we'll see what's the undisputed liability and what is the reporting requirement under CARO. So, in whether the company is regular in or statutory dues to the appropriate authority, and if not, what are all the statutory dues which are outstanding on the date of the balance sheet, which are overdue for more than 6 months. Only those liabilities I need to report, which are overdue for more than 6 months. I need to report it as a CARO. So here, as I mentioned in the earlier, only can I take can I ignore all those liabilities which are there after 30th September, because 6 months from the date of balance sheet prior to balance sheet is the 1st October. So from the liabilities from the 1st October to 31st March, I can ignore, right? So only those liabilities which are there before the 30th September have to consider for reporting under this paragraph. What comment auditor will give, whether he is regular in depositing or long pending, the auditor will report it here. So what's the scope? Regular duties, all the statutory dues, including the GST, he need to report in this paragraph. So when liability is due for reporting. So I already discussed in the previous slide that, let's say, liability for the September month return will become due on the 20th October, right? But as on the date of balance sheet, if I not paid the September month liability, so on the 31st March, let's say 2023, 6 months will not get over to report in the paragraph 3. So I can ignore the September month liability also. Only for the first 5 months, if I have not made the payment, then only those liability, that liability I need to report it in the paragraph 3. So what are the inclusions for the reporting? All the taxes, not only the taxes, it includes the interest, penalty, late fee, other fines, or have to be reported in this reporting. And the report should be restricted to the actual areas, and it does not include any of the payment which have not fallen due to the appropriate authority and not have been recognized as an outstanding due at the balance sheet date. Only those actual areas I need to report it here. Okay, so it's recommended to take the management representation stating that all the cases and amounts considered disputed, and the completeness of the information provided by the management, and also list of the cases and the amounts in respect of the statutory dues which are undisputed and have remained outstanding for the period of more than 6 months from that date they have become payable as on the date of the balance sheet date. Okay. So how to report? How the auditor will report? If all the dues have been paid within that time, if he is satisfied, then he will give the satisfied. And if he had not payments had not been paid within the time, and in that case he will give the not satisfied comment. Okay, so we know the satisfied, not satisfied. Okay, if you see the partially satisfied and partially not satisfied, case of partially satisfied, when this comment will given. out of 12 months, there is a delay of payment for the 2 months. That is not the severe thing. Only for the 2 months they have delayed, they have made the payment slight delay. In that case, he may give the partially satisfied. When he will give the partially not satisfied, out of the 12 months, he had not deposited the liability within the due date, but he is depositing. That's the severe thing. So in that case, he will give the partially not satisfied comment. Sir, would you like to add here, sir, anything?
Yeah, so this being the prerogative of the tax auditor and the statutory auditors have to use their words wisely. The one which have been highlighted gives an indication whether they are satisfied, not satisfied, partially not satisfied. So it is a personal call, but in the peer review or during any of the cases for review by an external authority, there would be a question on the auditor as to how did he choose. So it's very important in the workings of the auditors, he has to have GSTR 1 and 3B filing dates for the respective period. What is the due date? In the last financial year, except 1 or 2 states, generally there hasn't been any extension. So 11th being the due date for R1 and 20th being due date for 3B, plotting of the original filing dates and giving this comment would help the auditor to take a decision.
Okay. This is the format how we have to report the undisputed use. In the first column, we need to report name of the statute, let's say GST, and then nature of the dues. You can put the monthly returns and the amount, how much undisputed due is there, and the period to which the amount relates. Let's say, let's take an Jan month or Feb month. That's the period you have to mention in this, and the due date, when that due date to make that liability. For the Jan month, liability is on 20th Feb, right? So 20th Feb, you have to put there. And the date of payment. If the payment has all made subsequent to the balance sheet date, that is, if the payment is made in the month of the July, that date you need to put it here. And the remarks, if any. Okay. So similarly, the undisputed disputed amount also, if there is any disputed amount, you need to report it on the paragraph 3.7b, and we'll see how to report that. Yeah. So here, name of the statute and the nature of the due, if it is a penalty or late fee or tax amount, and the amount and period which the amount relates, it's a Jan month, and the forum where the dispute is pending. The dispute is pending with the appellate tribunal or the High Court, Supreme Court, in which forum it is pending, you need to report it here, and the remarks pending.
From the GST perspective, what constitutes as the disputed or undisputed is only when the DRC 07 has been issued. DRC 01 is an intimation, DRC ASMT 10 is an intimation, ADT 02 is an intimation. There are notices or show cause notices will not create a demand. A demand order has to be done. So only then you classify them. If the demand order has been, you are making the payment against the demand order or not, you still start to report, and whichever is the appropriate forum, whether with the first appellate authority, also you still need to mention the details.
Okay, over to Ashikam.
I hope screen is visible to all.
Yeah, visible.
Okay. Now, as we discuss about our tax audit report disclosure and about the CARO report, how the GST have impact on the same. Now we will be moving forward. What are the disclosure in relation to GST we have in audited financial statement, and how all those all those things which are appearing in GST returns or the details which is furnished in GST return can be used for the purpose of purpose of identifying the transaction which needs to be disclosed in tax audit, CARO, and audited financial statement. Now, first starting with what are basically present in audited financial statement in relation to GST. So for the purpose of reporting in financial statement, one of the head is our input tax credit ledger. Normally, all of us maintain one electronic credit ledger whereby we keep on booking all the expenses on which GST has suffered. That ledger, we will keep booking all the expenses over there. Sometimes some people maintain 3 ledgers, saying it to be IGST, CGST, SGST separately. Sometimes they maintain one single ledger where they account for all. So it is advisable first to maintain separate head-wise GST type. Reason being due to utilization, because IGST though can be adjusted with I, C and S, but C and S cannot be adjusted with S or C, vice versa. So we will be maintaining our input tax credit detail. That input tax credit detail we basically report in our other current asset, where we give of input tax credit detail, which is lying as on date of 31st March. Another component is GST paid on RCM. Whatever ITC whatever tax we paid under RCM is eligible for ITC. That also form part of this input tax credit and is reported in current asset. There may be a case where you have not availed the ITC, reason being either it does not match with 2A or it's not reflecting. That ITC, though we park separately in our books of account, but for the purpose of reporting in our audited financial statement, it forms part of current asset. Duty paid on export. So whatever tax we paid on export, IGST is eligible as ITC, plus as the export incentive, refund is allowed on the same. Same also form part of this current asset. And we have to disclose over there, if suppose I have claimed ITC of rupees 1 lakh, out of which I might have applied for refund for export of 80,000, then I have to basically park this refund amount, because when I will be showing, I will show I have a ITC of 1 lakh. 80 lakh I will debit as a refund amount to be refunded if I have not got the refund. If I have got the refund, automatically my electronic credit ledger will get reduced by 80,000 and 20,000 will be closing balance. But where refund has not been sanctioned or it's pending, that will form part of this 1 lakh only and will be reported in other current assets. Then come your cash balance. Normally for GST, we maintain 3 ledgers in our books: electronic credit ledger, cash ledger, liability ledger, or output liability ledger. So whatever tax is payable over the sales, we report it as an electronic output tax liability. Whatever we paid through cash in electronic cash, and ITC eligible in electronic credit ledger. And at the end, we pass one set of entry. That set of entry is very important to be passed, because your books of account should match with your GST portal. In portal also 3 ledgers are maintained, and all that 3 ledgers should correspond to books of account, and accordingly the reporting should also be done in your balance sheet. Then for refund, as we discussed, there may be a case of refund you have applied but not sanctioned, or it has been applied and refunded. In case if it is refunded, obviously automatically your electronic credit will reduce. Where it has not been, it is pending, it will form part of current asset. There may be cases where you might have been served notices. For that, in notes to account, we can give separate disclosure if any notice has been issued. Where demand has been issued based on the merit of the case, provision can be created. If provision created, that need to be reported in notes to account. Now, other reporting aspect to be noted is, in notes to account, we write our method of accounting, how we are accounting the same, cash basis, mercantile basis, or are we reporting? Most of time now we are not reporting gross up. It's a ITC taxable value only we are reporting. So what is our recognition policy, revenue recognition? Because there is a difference, the way turnover recorded in books and the manner in which tax is payable under GST. That we will discuss. And contingent liability, as we discussed, if any demand order has come based on the merit, obviously we will create certain provision for it. Notes to account. In notes to account, as we discussed, we give revenue recognition. We also give related party disclosures. This how you can derive from GST, that we'll discuss in our subsequent slide. Foreign income and expenditure disclosure we give. That also how the GST, there is an interplay between your accounts and your GST, will discuss in subsequent one. Contingent liability on account of anti-profiteering. Any departmental correspondence like pending cases and all, and refund application it filed. All these things we disclose in notes to account. Now, finalization of turnover and output tax liability. 1 minute. Finalization of turnover and output liability. Now, it's important to understand the difference between how books work and how GST work. Whatever turnover we consider in books, it's not important that it will match with my GST return. Because in books or while doing our statutory audit, we do accounting based on accounting standard and Ind AS. So based on AS 7, 9 and Ind AS 111, 15, books will be recorded and will be prepared. But when we come to the part of GST, there is a separately different manner of recognizing our revenue and paying tax on it. That is time of supply. So what may be the income for book may not be the case the liability has arisen under GST. Just for saying that, there is a concept of unbilled revenue under our books, where based on matching principle, we recognize income to the extent of expense incurred plus to the extent of proportionate service provided, though liability to raise invoice as per the contract has not arisen. So those provisional income which has been recorded for the purpose of books, but it is not an income under GST until and unless invoice is raised. Coming to the part of credit note and debit note. Whatever may be your reason for reduction or increase, you may raise commercial credit note, financial credit note, discount may be given, incentive given, whatever. All those adjustments you can do while finalizing your books of account. But when we come to the supply part, GST part, over there, time limits comes into picture. All credit note which you are raising will not immediately give you benefit under GST. For raising a credit note, there is certain condition which need to be fulfilled. And credit note is not allowing each and every circumstance. Like if you didn't receive any amount, you are writing it off, bad debt. Or where there has been a suppose change in price. That time, even GST also recognize that you can raise a credit note. But the thing is that should be within the time limit, that is 30th November of next financial year. So like we are standing in 23-24, for 22-23, you have the last date to raise the credit note before 30th November and disclose in GST return. Then revenue classified governed by AS 17. Then we have a segment reporting, whereby we report of each and every segment what are the revenue we earn. But in GST, when we go, there is a concept of classification based on supply type, whether it is a B2B supply, whether it is an export with payment, without payment, is it a SEZ supply, exempt supply, taxable supply. In case of advances, for the purpose of books of account, it doesn't form part of my income. It will form only when I raise the invoice. But when we come to GST side, supply which is made, advances which is received even before supply is made is taxable in case of services. Now coming to the part where non-monetary value. Now, as a concern can have a different GST registration. Person having one PAN, multiple GST, there is no recognition of income in between them for the purpose of statutory audit report. But when we come to GST, GST recognize the concept of distinct person. So even our transaction between branches is considered as taxable, though for the purpose of statutory report, you won't be considering the same. So you want to add something?
Nothing, Ashika. Please proceed.
Now, there will be a difference between books and GST turnover. As we discussed, there are the multiple scenario. Similarly, GST also recognize the same. Like we discussed about unbilled revenue concept. GST recognize that there will be difference between what you have recorded as turnover in your financial statement and what is the tax you are offering under GST, like unbilled revenue, unadjusted advance, deemed supply, as we discussed, is about a transaction between distinct person, means of transaction between branches, HO to branches, even though as from the point of view of income tax, they are 1%. But when it comes to GST, it is based on state-wise registration. So even though for income tax, they may be 1, but for GST, they are a multiple person based on state-wise registration. Even if you have taken within a state multiple registration, you will be regarded as different person. Then we discuss about credit note. Like I said, under GST credit note, benefit is not allowed in all the cases. It is only few cases, means where there is a return of goods or service, where deficient provision of service is there, where you have charged wrong rate of GST, or where there is a change in the value. Only in these three circumstances it is allowed. Plus, there should be a time limit. But when we comes to books of account, it doesn't matter to any of you. When you are doing your statutory audit, whatever be the credit note raised or whatever the manner you have, for whatever purpose you have adjusted, it will be allowed for the purpose of your statutory audit. Trade discount accounted for in audited financial statement. This is for specifically for 17-18, now not relevant. This unbilled and all we have discussed. So while doing books and GST for the purpose of statutory or audit and GST, though they are, there is a connection between them, but it's not the case. Whatever turnover you mention in GST will match with your books, or whatever you mention in books will match with GST. But whatever the things you can use from GST to prepare your tax audit report and your CARO, we'll discuss that. Like as we discuss about GST from books, now from books to GST, like rental income from immovable property. Now, if a proprietor is having a multiple, having 2 or 3 occupied to a property, and one of which is not occupied, we know that under Income Tax Act, we have to offer for rental income for tax for on a notional basis. But same is not a situation under GST. That will not be liable under GST. Salary income is outside. So no GST applicable. Now coming to, if we come to partnership, introduction of asset by partner is not taxable. Receipt of asset on dissolution is not taxable under GST. Partnership salary and interest. Now general, as we discuss about discount and incentive from credit note. Foreign exchange gain, though for the purpose of statutory audit you recognize, but it's not an income under GST. Profit on sale of asset, we recognize over here profit. For GST, profit is not taxable. Instead of that, sale of asset which you are doing, that need to be brought under tax. Recovery of bad debt will also not be taxable. Reason being, whatever may be the debtor from whom you were amount to be realized, at that time when the tax invoice was raised, you must have paid full tax on it. So when you are recovering, there cannot be any GST. Penalty, damage or forfeiture, it depends upon case to case. On that basis, it will be decided whether taxable or non-taxable under GST. Now, going by few clauses of tax audit report, how your GST will be helpful is over in clause 23, we have to furnish a detail relating to related party transaction. So while doing our GSTR1, we give transaction wise detail, irrespective of the fact it is a related party or non-related party. Over there, when we are giving our transaction wise detail, based on GSTN, we can identify whichever are the party which is related to you. That detail, based on comparing with your books of account, you can identify if anything has been missed out or not. If your books and GSTR1 is matching, plus with your related party books, your ledger in related party books is matching. Those data you can verify and accordingly report in this tax audit report. Clause 26. Over here, we have to write about whether tax has been discharged within the time limit. So I'm not going into other perspective of the taxes. I'm just limiting it to GST. So over here, we do our GST reconciliation and where we see that tax payable after ITC adjustment is been paid or not. So over here, we see whether the returns have been filed within due dates or not, whatever tax payable has been paid or not. So from GST returns, whatever have been filed, or by doing GST reconciliation, you can check is there any non-compliance is there or not, and accordingly can be reported in this clause 26. For the purpose of doing our computation, if you will see our GST1, it is divided into multiple type of transaction. Like as we discussed previously also, we divide our transaction into B2B, B2C. What is our zero rated, export with payment, without payment? Is it exempted or it is just a transaction in many petroleum product? This bifurcation, which is done while giving our transaction in GSTR1, based on our books refo, we can identify if anything has been missed out or not, and accordingly, same can be taken care while doing our statutory audit. If suppose there has been a case where by mistake same has been considered as exempted, which should be taxable if it has been identified, because when we furnish our detail in GSTR1, it's not only type wise, but it also on the basis of goods or service, HSN and rate of tax. So this all bifurcation on comparing with good will on comparing with will give a clear idea that whether any transaction has been missed out or not, or whether any transaction which is there in GSTR1 not in books. There can be an instance where maybe it might be cancelled in book but appearing in GSTR1, or it may be a case where GSTR1 it is present but in books it has been missed out to be reported. By doing all this reconciliation, correct turnover can be arrived. Based on that correct turnover, correct taxability can be derived. Whatever tax need to be paid is correctly paid or not, and accordingly the same can be accounted in books of account, and income can be recognized for the audited financial, and same can also be used for the purpose of reporting in your statutory audit report about the tax compliances. We basically suggest whenever we do our reconciliation, we should do multi-dimensional. That is, we should not only stick to matching financial turnover with GST turnover. That is, we should not see that if my PL income is showing 100, my GST turnover, GST return, which is filed by us during this period, is also showing 100. That is not the manner it should be done. Rather, you should go for multi-dimensional, means you should do your comparison just not based on the figure, but whether rate wise it is matching or not, or tax type wise it is matching or not, to get the clear picture. Because though for the purpose of statutory audit, your compliance with end once your turnover get matched. But when it comes to the part where you have to write about statutory duties, which is payable or not, has been discharged or not, at that time, this way of reconciliation will help you to correctly report in your CARO and tax audit report.
A point here I would like to add that as in the earlier slide where Ashika was mentioning about reconciling the turnover which is there in the financials vis-a-vis the GST, you also have to match the tax liability. It may so happen that the SSC has paid some taxes at 5% instead of 18%. Now, if someone is paying a tax at a lower rate, there is no change in the P&L from the revenue perspective, while tomorrow department will come back and ask for payment, making a payment under differential thing. So there is a financial impact or a cash outflow. For example, let's say a real estate entity has discharged the tax at the rate of 1.5% while it should have been 7.5%. Otherwise saying 5% or 1%. Now, the revenue is matching while they have adopted a wrong rate of tax. So as a statutory auditor, you should also ask for the corresponding notification where or the opinion or some documentation which made them to classify this turnover under different rates. This is also forming part of the statutory audit working papers and the tax audit working papers. Yes, Ashika, please.
So how GSTR1 will be helpful while doing your statutory audit is if there is any related party or distinct party transaction, it will be showing in your GSTR1. Similarly, it will be also be coming in GSTR2. It's because there is a two things is happening. There can be outward also, inward also. So while verifying your books of account, if any transaction by mistake, which is in relation to distinct party, because that is not an income for statutory audit. So it cannot be form part of revenue where you can increase the revenue, and similarly you will show as your outflow. Purchase and sale both cannot be shown for distinct person. So in that way, by reviewing your GSTR1, you can cross verify that any of this distinct person means transaction between the unit of same pen has not been accounted, or if accounted, proper care has been taken care while preparing your audited financial statement. Similarly, in case of related party transaction also, like as we discussed in earlier slide, we have to give our related party details in clause 23. So based on GSTR1, you can verify what are the transaction happened. Similarly, for GSTR2A will also be helpful to you to verify if any related party transaction is there, purchase or sale. You can match with your books on account and accordingly report in your clause 23 of tax audit report. Sometimes it happened is purchase return is considered as a supply. What happened? I don't know, but most of the people are having a wrong impression that in case of purchase return also tax invoice can be raised. It to be noted that under GST, debit or credit note relate to the person who has raised the tax invoice. If I be the person raised that tax invoice, I am the only person who can raise credit or debit note. No other person can raise against my supply credit or debit note. But there is a wrong notion in some of the people that even though that supply doesn't belong to them, they raise tax invoice, debit note to their supplier and return the good. That is a wrong practice. And they do that and they disclose in GSTR1. Now, for the purpose of audit, if I see this is the return of goods, so it's not an increase in income on which I am liable to pay tax. It should be reduction in my purchase on which any SSC has done that error. Proper care may be taken. But doing the GSTR1 review, that in statutory audit and sale can be reduced from your purchase will also help in identifying the type of income which the SSC is getting. Because in clause 10 of tax audit report, we have to give the nature of business of the SSC, where we write what is the type of service or whether he is in a trading of goods or what goods he is dealing with it. So HSN used in GSTR1 must also corresponds with the nature of business you are disclosing in tax audit report. Obviously, as we are doing reconciliation of books with GSTR1, if any duplicate invoice, missed invoice, or is there, that could be accordingly taken care and rectified in books of account or GSTR1 as the case may be. If any back entries has been passed. Now, this is also a very good because in GSTR1, if you will notice, though we report date-wise invoice, but it will reflect in the month of the return you filed. So if a SSC, even though in books, he might be writing in September of August invoice, but in GSTR1, he will disclose in September only. So if any back data has been filed after your audit, you can identify those transactions based on GSTR1. Data versus invoice raised and advance received. In books, when debtors ledger is there, that could be checked with the tax invoice and advances detail, which is shown in your GSTR1. If any error is there, suppose books or GSTR1 mismatch is there, maybe error may be in GSTR1. If error is there, obviously, people will do a subsequent amendment. So that could be checked whether what the SSC is saying. Suppose it's saying that it will be 12,000, not 15,000, which is shown in GSTR1. Obviously, he would be rectifying that in GSTR1 in any subsequent month. So based on that verification, it can be verified what he's saying is correct or not. For the GSTR1 is not only the return of providing outward supply is serve as a base for availment of ITC by the recipient. So if anything wrong in there in GSTR1, obviously recipient will also not be keeping quiet. They will want them to amend. So GSTR1 is one of the most important form in GST, which can help you to identify that properly transaction has been recorded in books. Sir, you want to?
I think at this point, Ashika. Please continue.
So with income side, we shall move now. When you are reviewing your expense side, there will be two components. Some expenditure where GST is suffered, some expenditure where GST is not suffered. Where GST is suffered, obviously over there we will analyze whether the expenditure for which it has been incurred is eligible ITC or not. Though for the purpose of statutory audit, you don't need to identify eligible ITC, but somehow indirectly you need to identify that reason being ineligible ITC. If it is there, you won't be eligible for ITC, and that expense, that GST tax which is paid on that expense need to be expense off if it is in relation to PL, or need to be capitalized if it is in relation to fixed asset. So this analysis, though not directly linked with your statutory audit, but it need to be done in order to arrive at correct expenditure and correct profit. So we'll divide our expenses with GST in two parts: eligible, where they will be eligible and they can claim, no need to be form part of your profit and loss account. But ineligible, where it will form part of your expense and will have impact on the profit. Another type of expenses where GST is not suffered. GST not suffer, there can be a reason, there can be exempt, non-GST or RC. Non-GST item will have not much impact in case of analyzing of statutory audit, but the expenses which are under RCM, liability need to be created and tax need to be paid on the same. But so for the purpose of statutory audit, you have to see whether they have paid or tax or not, because then you have to report in your tax audit report. So for expenses with GST, now it's very easy to match whether all the expenses has been accounted for or not. Reason with the introduction of 2A or 2B. So wherever there is expenditure with GST, you will be sure that whichever expenses has been incurred, it's accounted for. So where the expenditure which has been incurred is matching with GSTR 2A, there is no doubt that more or less it must be incurred for business purpose. That's why it is appearing in both the side and it has been properly accounted in books. Credit, which is only in books. Now, only in books, which is credit, over there, it need to be checked whether they have just recorded for the purpose of recording, may not relate to the business expenditure. Like restaurant service, family went for the restaurant, they incurred the expenditure, provided GSTN over there. Sorry, not provided GSTN, but that expenditure has been accounted for in the books of account. So in this way, GSTR 2A will also facilitate to identify whether the expenditure are in the nature of personal expenditure or business expenditure, and even capital expenditure to some extent can be identified, because everybody GSTN is there. Based on GST and whatever the type of service or goods they provide can be verified on the GST portal. Now the credit which is only in portal, now that you can check whether it might be a case of misreporting, or it can also be a case that it does not relate to you. It's all depend on the circumstance of the case. So in this way, GSTR 2A will ensure that all the expenses which are incurred are properly taken care while accounting, while doing your statutory audit. It will also be helpful for clause 21A of tax audit report. As you can see in this tax audit clause 21A, we have to disclose our capital, personal expenditures, advertisement expenditure. So as I discussed in GSTR 2A, all GSTN are representing. And if a person has classified any ITC as ineligible, because ineligible 17.5 does not only cover in relation to construction and all, it also considered in nature of gift, personal expenditure. So if any ITC has been considered as ineligible and reason being of any of this, then you can use it for the purpose of your filing your tax audit report. Clause 21B, foreign expenditure. Over here, we report foreign expenditure. So if any expenditure in foreign is there, GST need to be paid under RCM as import of service. So if any tax has been paid under import of service in GSTR 3B, same can be taken care that whether it's related to anything in relation to Forex or not. And same can be reported over here. Plus in notes to account also, we have to disclose our foreign income and expense. So that foreign expense can also be used to check whether GST has been paid on the same or not. So there is an interplay, correlation between them. Both are dependent upon each other. The way you report in your tax audit report or CARO will also determine your liability under GST. Similarly, what you report in GST will also determine how you are reporting in this and whether you have offered income tax on correct income or expenditure or not. Now 27A, over here we disclose about our standard credit, which has been earlier been discussed, that about the opening balance. Like as we discussed also, SEC is required to maintain 3 ledgers: electronic credit ledger, cash ledger, electronic liability ledger, in compliance with GST portal. So in electronic credit ledger, obviously there will be a opening balance, there will be ITC avail, less utilized, and a closing balance. But what is reported over here may not match with your GST portal. Reason being that GST portal is now solely dependent upon on GSTR 2B. So whatever the data is auto-populated, based on that reporting is done. And there may be a case of only in books and only in portal. Like we discussed in our previous slide, there may be a transaction which may be appearing only in books, and there may be a transaction which is appearing only in portal. Only in portal, it need to be taken into account whether it's related to you or not. It is related to the expense which is incurred for business or not. Based on that, that will be accounted. So there will be obviously a mismatch between this 27A and GST portal. Proper RICO of this should be maintained so that in future, because the way the tax audit report has been made is just to make sure everything go hand in hand, direct tax and indirect tax. So in future, they are going to check all these things. So proper RICO you should maintain if there is a difference between what is representing over here and what is representing in your GST portal. Plus, this also can be checked because GSTR 2B is based on your date of invoice, which is based on filing. So even though it may relate to 22-23, if it is reported in 23, suppose August 23, it will show in August 23. So even GSTR 2B can be used to identify is any of the invoices any of the prior period expenditure is there, which has been recorded in PL. So you can use GST 2B for that purpose also for clause 27B to identify those transactions. Reverse charge. So as we discuss expenses, we bifurcate. We have to also see any liabilities there under RCM or not. So these are the expenditure of services which are covered under RCM. So you have to check your expenses and make sure if any liability is there under RCM, you discharge it. If not, to check whether they have SSC has discharged it or not. If not discharged, you have to make sure you do the proper reporting in your financials. This is for goods which are covered under RCM. Now coming to the part of refund and demand, as it has been discussed in tax audit report, that in clause 41, you have to discuss, you have to give disclosure of demand, if any raised, or refund, if any issued. Now, this is not only in relation to only GST, but I said we will be restricting to GST. So you have to check if you will go to GST portal services, user services, there is option view notices or view additional notices. Over there, you can check whether any of the notices showing there or not. But it's not that every time every notice will be appearing on the government portal. Some may be received in manual. So you have to check any notice or demand order you have received or not. If it is received, you need to report over here. Similarly is the case of refund. Whatever refund application you have done, how much refund sanction, how much is pending, need to be reported. The way it is there in clause 41 of tax audit report, similarly is there GSTR 9 table 15. Over here also, we have to disclose our refund claim, sanction and rejected. And also same is the case with demand cases. But over here, while reporting, you have to make sure you have not to file with the refund application which is made in the financial year. So when you are doing for 22-23, now the refund which you have, it's not, most of the cases, it will not be for 22-23. We file for past year in the current year. So you might have filed for 21-22 in 22-23. That detail of how much you refund claim, how much sanction, how much rejected need to be reported. Over here.
One point I would like to add here is when the Ashika was mentioning about the refunds, it's also equally important that we review the demands and refunds in the stat audit just to check whatever the claims that the SSC is making submission, has it been approved or are there any rejections? If some amounts are rejected, the reason for them, and should there be a provision that in the books of accounts. I'm sure most of you by now has encountered some or the other audit notices, being it ADT 02 or some DRC 01, where asking the SSC to pay some tax owing to some turnover on which tax was not computed, or to reverse some input tax credit which they have availed. We are now in financial year 22-23 finalization. So while you look at these refunds and demands, you will also get a fair idea of is there any provision that is required in the books of accounts. So as a statutory auditor and tax auditor, I would recommend that you ask the SSC to prepare this schedule and get that is there any provision for the same to be made in the books of accounts. Anticipate for the future period. 17-18 you have, say 18-19 you still have another periods. I'm sure that it is prudent to make a provision if the facts of the case are same, and even though there is no notice received, still a provision would require. So making an analysis of this clause is also very important. Yes, Ashik.
It is also important to note that demand doesn't mean whatever notices you receive. It's mean demand order. Means once you receive from DRC 07 under GST, That means it's a demand order, and only for that it need to be reported in table 50, not ASMT 10 or any of the notices ADT 02. It's not what need to be reported. Similarly is the case with your clause 41 also. So it's all depend. Only just because one notice has received, you should not report. You should see at what stage it is. So coming to the part of miscellaneous provision, over here, like we do e-way bill recoup. We do e-way bill recoup. We do our e-invoice reconciliation. But all this, though mandatory for the required for the purpose of GST, but same is not the case with the statutory audit. You as been as a part of statutory audit, there is no requirement to do e-way bill repo or e-invoice reconciliation, but it is advisable to do, because if there is a non-compliance, suppose there is a tax invoice for which e-way bill required to be generated or e-invoice required to be generated, but not raised, that will not have any impact in your statutory audit report. But however, when we come to the part of missing details, means where while doing reco, you find that there is an invoice for which e-way bill has been raised, but corresponding tax invoice is not present in your books of account. Similarly, like e-invoice also. Then in that situation, you need to take care of the fact whether is a erroneous raising of that bill or erroneous raising of e-invoice, or it is an actual transaction which is not recorded in books of account. Sir, over. So you want to add something?
Yeah, so any questions, if you have, you can unmute yourself and ask the questions. Before we go to the next session on the Excel, which is more important for all of us. All right. So I would, yeah, you can ask Mr. Chandan. You can unmute yourself and ask.
Hello.
Yes, Mr. Chandan.
Sir, I have one question related to the GST filing. We showed the B2C invoices in GST portal in previous financial year. So I want to cancel this invoice for the correct
Cancel the invoice.
B2C. So how it will be happened, sir?
When you say cancel the invoice, you have never reported a B2C invoice, first of all. You have only reported the consolidated turnover made to B2C in table 7. So any error in the value that is reported in table 7, you will be correcting that while when you file your return, you will edit the values of that. So the editing the value of table 7 is provided only once. You got to be careful about that. Such addition will be treated as your rectification. Vadivela is asking, in 2018, we wrongly uploaded in another GST. Can we now change? Answer is no. Any correction that you are doing under section 37, 10 or 39, it should be done before 30th November.
I want to, sir, cancel this invoice, sir. B2C, sir. All.
Mr. Chandan, you have never reported as B2C invoices in GST 1. That's what I'm trying to say. There is no option to report invoice of B2C in GST 1.
Sir, the reporting has been done in B2C, Now the problem is the client has come back with a GST number. So we want to know how to correct it.
Okay. So you have not reported a B2B invoice, you have reported as B2C. All that you
Yes.
will do is now you will be reporting in your table 4, provided that is pertaining to financial year 22-23. You can report it in your the table now, and you correct your table 7, which is the value that you have excess reported. You can correct it in your table 10, and it can be easily done.
Okay.
Right. Any question? Any other questions? Whatever you have a question, RCM for goods. What is the query, sir? RCM for goods happens only in 5 categories. If it's a cashew nut purchased from an agriculturalist, if it is a silk yarn purchased from any manufacturer of the silk, if it is a lottery purchased from state, central government or the local authority, if it is a used vehicle again purchased from state, central or local authority, a priority lending certificate purchased by one cooperative or a scheduled bank from another cooperative or a scheduled bank. These are the 5 categories for RCM for goods. Yeah, any other question? All right. So now we will move to the next part of the discussion, which is usage of Excel and use of Power Pivots. I'm sure everyone knows pivot tables, so I'm not going to explain pivot tables, but we will be looking at Power Pivots. So I have shared an Excel file in the chat. You can download this Excel file. It will also be provided to you after the session, but we will be using this for our demo. So you can parallelly work with us in understanding how this works. So I now request Tarun to share his screen and start presenting the data. Tarun? Tarun? All right. So no problem. Till he comes, let me only share the screen and explain. Is the Excel skill visible to you? If yes, just put it as yes in the chat. All right, so I am seeing one yes. Obviously, then it is yes for everyone. Okay. A quick question. How many of you are aware of pivot tables? How many of you know pivot tables? If you know yes, I know pivot tables, put it as yes in the chat. Are you aware of pivot tables? Okay. 3 people, 4 people. No problem. This is an interactive session. Request you to interact and participate. The more you participate, the higher you will get the value. So in a normal case, if you find a data something like this, you will select the data and say what do we have here is a salesperson, the product he sold, the date and the sales value and the units sold, right? So in a normal case, you select the shortcut for inserting a pivot table is Alt DP, and you can say next, and it selects the data and finish. You have the data. So all that you will do when you have this data, you put it into some rows and columns. So let's say the salesperson is in my rows and the value which has been sold is here. So against each of the salesperson, the sales that happened is here. This is what we do in the pivot tables. And I want to know what are the products he has sold. I bring that under the each of the salesperson. It will be showing the products that he has sold under it. I can sort the data, whichever is here, in largest to the smallest, and I can see who has sold or what is the product that got sold highest. You can see all of this information. We all are aware of this pivot tables, right? I want you to honestly start giving up using pivot tables for two reasons. Reason number one, start using slicers if you want to know a shorter information. How many of you are aware of slicers? I've just deleted the pivot table. How many of you are aware of slicers? So if you're aware of slicers, put it as yes in the chat. Yes, I am aware of slicer. One yes, two. Okay. So for slicer to work, slicers works only on the tables. First, I have created this as a table. Let me just convert this as a range. So this is a normal data set. In normal data set, I cannot insert a slicer. When I go to insert table, so let me go to insert, and I'm just selecting a slicer. So it is unable to find where do I insert a slicer. I don't find any data set. So to have a slicer, first, either you need to have it as a pivot table or a table. It has to be in a table format. So the shortcut to create table is Control T. So select the data, it will automatically by default select the data, and you can say yes, Control T. And now you can go and you can insert the slicer. There are things which I want to really understand that how the slicers work, right? So in the insert, click on the insert, there is a slicer. So I want to put this slicer on the salesperson and the product that has been sold. A salesperson and the product that has been sold. Now look at this. If I want to know 50% dark bite chocolates, I can see all of the people who have sold 50% dark bite chocolates. And if I'm just selecting the person Anil, it is giving on the data. So what is it doing? It is doing a multiple filters of the data. It is filtering the data automatically. It is filtering the data automatically. And the best part, you can also have a timeline. You can also, let me just see if this is a date. Yeah. So you can set this data, insert. Okay, it's not getting any in the data model. You will anyhow, we will be able to see it. Let's see that. On the sold on, I am putting a timeline. Okay. Now you can see the sales which happened for the month of July. You can set a timeline and you can start filtering the result. So I'll explain this in the pivot table data modeling. So timing, and let me just, yeah. So you got a fair idea of slices. So slices is a quick, shorter report. Instead of a pivot table, I'll do this. Now I have the other set of data here. What is the other set of data that I have? The other data I have is against each of the product, what is the category that product belongs to, and what is the rate cost per box. There are employees. Each of the employee, I have the date of birth of that employee. Against the employee name, I have the employee working in a different team, and they are working in different locations. I have that. So I have different data sets that are available. Now, we can actually create these as data models and consume them one by one. How do I do that? You can add this, and by the way, if you are using older version of the data, you will not be able to, in a pirated version, you will not be able to do it, but in a regular version, you can do it. So I'm just going to my data. Yeah. So on the top of the screen, you are able to see a word called pivot, power pivot. I'm sure most of you are able to see this on your Excel. Are you able to see this in your Excel also? Do you see a power pivot in your Excel? If yes, put it as in the chat as yes. I can see one response as yes. In others, in your Excel file, do you find this word? Forget Excel Wings, that's an add-on which I have done, but are you able to see this word power pivot on your top of it? One more person is saying yes. You should know, if you are using the original version of the system, you will be able to see this. Excel 2016 onwards, definitely this is available. Okay. Now, how do we create this? Let me clear my drawings. Now I'm selecting the pivot and I'll try to manage the data model. I have not created any models. So you can see that everything is blank. There are no data models. So let me add the data models to it. Okay. So I'm adding a model. So this is the data. I will say from G2 to G27 is one data model. So it has automatically created one more, a mini Excel type. The moment you said that, you will find one more Excel type, the data set has come. You can create a name to it. Right now it is showing as the table 2, right? Instead of table 2, you can say employee date of birth, right? I don't know what is there in table 1. So it's always important. Let me close the files so that the system becomes faster. So this is the sales data. Table 1 is the sales data. Right. So if you see, I am now creating a data models for each and every one. So employee location details. Let me add this, add to the data model, employee location. This is added to the data model, and always just rename, ensure the proper, otherwise when we are creating the pivot tables, you will find the challenge when things are like this. Let me rename, and this is the employee location. Then we have some more data set here. Yeah, then the product category. So let me add this to a data model, the product category. Now we all have seen a pivot table earlier with the existing data. The pivot table got formed. So now let's see the advantage of creating a power pivot. So you are combining more than one pivot. So this is product category, right? Okay. Now okay, so let take a look. Let me remove these slicers also. Okay, so take a look at this data. All that I have is salesperson, the product that is he's selling, and when he sold, the sales value and the unit sold. This is the only data I have. Now I am creating a report. I'm creating a report section. Here, I now want to create a power pivot from the data models that I already have. So let me manage the data models that are already I have. So I have sales data, employee location, and product category. I have to create a relation to it, which I will create at a later point in time. Now, let me go to my sales data, and I am now saying that I want to create a pivot table of it. So in a new sheet, let me just create a pivot table. Look at it. Here, on the right side of the screen, you are automatically seeing the data models. In the earlier situation, for one single data, a pivot table was created. What was the one single data the pivot table was created? It was a sales data. And what we have done earlier is we have, against the salesperson, we have listed what is the sales that he has made. This is what we have done. This is what we could have done in a single transaction. But if I want to know the sales that are happening by location, so carefully look at the sales value. The value of the sales that has happened is 4,60,80,000 is my sales. I want to know which location the sales has happened. The location is here in the employee location. Let's say if I just drop the location here, I'm just dropping the location here. Entire location, this 4,60 has come, which is not right. I can create a relationship, or I'll say auto detect the relationship. And the relationship is done and it is trying to do. Let me also add multiple things. Let me get the from this, yeah. Let me create. So in the sales data, whatever is the salesperson is there, in my location, employee location, there is an employee name. Both are one and the same. Now I've created a relationship. Look at this. The total sales 4,60,00,000 has now become against each sales, each location that the turnover has become. Now the employee are into different teams. I want to know by team wise. So there is unallocation of 41 lakhs. So one employee wouldn't have got mapped. That's okay. But you can see, you are seeing the sales data. You are seeing the sales data by location and by the team, whichever the team they belong to, you are seeing the sales by the team. While in the sales, you neither have the location, you neither have the team, or The other way saying, let's say I want to get it from the product category. Instead of my location, I want to know the category of the products. But again, product category, the relationship is not defined. I can say I want to create the product category. So from my sales data, whatever is the product that has been sold in my product category, I can say the product name, both are one and the same. Now, once that relationship is established, you can now see the bars, bytes, and others, whichever is the category, it has automatically detected. So what's happening in a Power Pivot is the data which is existing in multiple data models, I am able to connect this and present it. How do I use it in a day-to-day basis? What I have shown you is a simple sales information. You can now use it in anywhere, any data sets. So as long as you can create a relationship, so there you should be able to establish a connection, one single connection point. For example, in my products which I have sold, there is a product name, and in my product category, there is a product name. So linking this category will automatically take to the next step, and it is started using and giving the information. So the advantage of Power Pivots is you are now on top of the data. In fact, this is just a beginning. In the next session, I'm going to tell you about the advanced modeling that you can do on the Power Pivots, wherein you will be able to apply these functions. While today I'll also explain you a little bit about filter, which is the next version of the slicer, but you will be able to now appreciate that the data which is pertaining to the different categories, we are able to easily put it into one domain, one related place, we were able to do it. Is this clear before I move to the next section of the Power Pivot, which is DAX functions? Anyone has any doubts in the points that we have covered so far? Any questions? Perfect. No question. Let's move to the next, which is DAX function. Let me see if Tarun is available. Tarun, can you go to the Power Query and show the DAX functions?
Sir.
Yeah. Okay. Okay. Can you share your screen?
Okay, sir. Okay.
So DAX functions work on the Power Queries, Power Pivots, but I want to show DAX function from the Power BI because we started the journey of understanding the Power BI. We already completed 2 sessions of the basics of Power BI where we just manipulate the data. Today, we will see how do we write the DAX functions in the Power BI. Now, let me tell you what is this DAX function. This is all like M script. All these are the new age data. DAX is a short form called data analysis expression. Now, this is a functionality that has been built, which is actually there already in the pivot tables, where you can create a new variable from the existing data. For example, you have product price and the quantity sold. You can derive at the value by multiplying the quantity and the rate automatically value. You have the value, you want to find the average standard deviation, you'll get a value. From the standard deviation, you want to find the difference between the actual data to the standard deviation. So on top of the existing data, if you want to create your own variables and create, you will use this DAX, which is data analysis expression functions. In a short term, we call it as DAX. Now let's work on the Power BI DAX function. On the same, Tarun, I want you to use the same data of the sales data so that we will just create some values over there. Yeah. Tarun, you are there?
Sir, yes, sir. One minute, sir. uh,
Friends, on the left corner, you can see the graphs, data model, and relationship. In Power BI, these are the three things: loading the data, creating the reports, and building the relationships. Building the relationships is what we have seen today while creating 2-3 data models. When we have created, that is what is building the relationships.
sir, can I input, sir?
Go ahead, go ahead.
Get data, Excel workbooks.
So now
So
we are
it
getting
is-
the data from an Excel workbook.
So it is in desktop, Power Pivot raw data.
Yeah.
So open. So these are the tables that present in that sheet.
Power BI
So-
automatically detects all the sheets that exist, and we can just select them. You can transform the data and load it, or you can just like that, you can load the data.
So I will select. So we have to clean the data, sir. We loaded the data from Excel to Power BI by using Power Query Editor. So this is the files which we are loaded, and these are data columns which I imported. One is calendar table, and another one is other data and sales data. From this, we are going to make one report, and we write measures, aggregation measures, nothing but sum X, average X, small measures. And I will show you what data is in that. These are all report view, table view, model view. It's a report view where we are going to make reports, nice visuals. and table view. The data which we are imported shown here. This is the data and other data and sales data. And last one is a model view. Nothing but we will give a relationship between the tables. And these are three tables which we are imported. One is calendar table, other data, and sales data. We need a common. Okay. So now we will take in the sales data, and from sales data we are showing in a product sold, sales persons, and sales value. For that we are taking in a matrix table. So this is called a matrix table, matrix visual. In that we have to insert these are sales persons. Values to be in values column, values field, and product sold. So now we will make a report. And I will show you how to write in one measure. It's nothing but sum column, sum x measure. For that, I am taking new measure.
So now measures are the DAX function. So something which is not there, we are now writing as an additional thing. Could be some product or all those things. Let's see some examples.
Why we will write a measure? Because measure will not occupy a space, where column occupies more space, and it increases the file size. And when we open once, it's taken lots of time to load the file. For that, we will use a measures. Measures is more comfortable. So I'm taking a measure, new measure. So now I will name this column to a sales value. Where we have to give a sum. Sum is nothing but an aggregating function. So sum sales value this we write a measure. So we will insert this measure to matrix visual. It shows the same values, but when we go to table view, we can find that here sales value as an occupies a space, occupies a memory, and measure will not occupy a space, and it will not show any columns or anything else. This is how. And this is the difference between column and measure. So we'll take another measure, which is count. So we need to count the salespersons. How many salespersons in our table? So we will take another measure, which is new measure. So we want to count. I will take a count. In count, we need to take a salesperson. How many salespersons in our table? I will click. So measure is created. Now I will take in a card visual, which shows the so this is how it shows an account. When we take an account measure, and we will take another one average measure. Average. So I will take another one, which is average measure. So I will take another. So So I want sales value average. So I will take a sales value column. And it shows the average sales. So I will take a card visual, and I will insert this average into card field. So this is the average overall of our sales value. So we can convert into normal values. For that, display limits none. So this is the average value or our sales value data. And another one is min x. We will take min and min x. So first of all, I will take a minimum value. What is the minimum value of our sales value? So for that, I will take a measure. So min value. We have to write in a min function. In that, we have to insert our column. Is nothing but sales value. So I will take another card, or so I will insert this field into our matrix table, whereas our minimum shows the minimum sales value. So this is the minimum sales value for each person, and I will insert again this average column into this. So it will show the average for every person, average sales for every person in that table. And again, we will take an account. So this is how we write in measures and columns. in Power BI desktop. So we will move to another topic, nothing but Excel formulas. So this is a count for every person, sales value. So writing measures and columns in Power BI is finished. We will move to another topic, is Excel formulas.
All right.
Sir, this
Can
is
we
over,
move to
sir.
other functions?
Yes, sir. I used the average column count, min, max, all are, sir.
Yeah. So, friends, you might be wondering that, okay, is it simple? It's there in Excel also, but yeah, you now start using Power Pivot because it has an ability to handle larger data. Let me take control. Tarun, I am sharing my screen.
Okay, sir.
Okay. So, yeah, friends, you're able to see the screen, the Excel file. Are you able to see this Excel? Yes.
Yes, sir. Yes, sir.
Maybe. Okay, I got one response. That means others are also able to see the screen. Okay. And I would always want people to interact. Now, we have seen the slicer, right? So we can also have another function. Okay, by the way, always try using the data set as a name manager. For example, you can, this table, the table, instead of table 1, I have written as sales data. So always give a reference will like that. So I am saying filter the sales data. All right. And in the filter command, okay, you can just give your conditions, like the condition here is if the salesperson is equal to Anil. All right. You can automatically see that the data of the salesperson who is Anil is here. So this is also another way you are applying like a slicer, right? You can have the people over here. You can I can just give the name here. Now instead of this hard coded to a person's name, I can also link it to a variable. So I just say the name and the sales of that person is coming. So this is another powerful feature where you can actually instead of slicer, now we are using a filter, which is taking the data from the source and giving you at a different place. Your original data is intact and you are borrowing the data. Does it work in the same sheet? Absolutely no. This works in any sheet. So I am just saying filter the sales data, where I can give one more the heading, the salesperson. So I can just create this as a salesperson is equal to, yeah, we get this name. So let's say, and the salesperson is this. You get all the sales of that respective people. So automatically you get the data from it automatically, right? So this is one function which we have seen. So we have seen slicers, we have seen the filter function. The next function which I want to talk today is about, people always ask, what are my top 5 products, top 10 data? So you can always use the function called take from the sales data. From the sales data, I want my the top 5 rows. So automatically, whatever the top 5 rows are, it comes automatically. So let's say, let me sort this data by, let me sort the data by the product ad level and sales value, largest to smallest. So you can see there are some now automatically Raghavendra, Tarun, Shreyas, Tarun, Ram. This is the data that is there. If you see in your report, Raghavendra, Tarun, so the top 5 records you got. So let's say you want to get top 10 records, you can just say whatever be the data. You are now from the data set, you are taking top 10 records. You can just. So this is the another way you can get the information. And you don't want all the columns, you only want the name of the person and the product he has sold. You only want the first 2 columns, you can say first 2 columns, you will get the data of only first 2 columns. So the syntax for it is take and the array. Array is always data set, always I would recommend creating as the data set, you will get a value of that. That's another function. Now, see, I also want you to get that there are inbuilt add-ons that are there in your data. Okay, you can get add-ins. You can click on this add-ins button where you can officially add in various things. Today, I just want to show you one small thing so that it's easy for you, you can appreciate. So how did I get it here? In my file option, I have clicked on get add-in, and the various add-ins that are already available, which have been written in Excel, I am adding it. I am just typing as calendar object. I want to get one calendar. So let me search. You can. Yeah. So there are a lot of calendar options are there. I'm just picking one. So I'm just adding a calendar. So you have a calendar option, which is here, right? Like this, you can have many, and once this is there, you can attach with the Excel. So tomorrow you are, this is permanently can be with the Excel. So people can, instead of typing some data, you can give them as an option where they get the data. So you can make it, toggle it is this bigger, smaller, however you want, you can set this. So let me just set it at this size. Okay. Now look at it. Here, the today's date is 16. It automatically comes. I want to make it, so I've selected it, it is overwriting. I'll say, okay, it has become 21st September. So you can give an option for people to choose. You want a work week to be known. So you are in 37th week of this year, you will automatically know this calendar. This below table you want to disable, you just set it. So like you want to look it neat, elegant, pretty, it can set. So anytime you go, you just select that record and click on that, the respective date function automatically pops up. So like this, there are many add-ins, and in the upcoming sessions, I'll just keep showing one. So you can get the dates automatically coming up. Now, the times when you have this data, so the sales data which we are seeing here, so you want the record serial number, okay, the serial number. Generally, there are multiple ways. People type it as 1, 2, and they actually drag along this, they just drag along. Or the other way people do is this, they select +1 and go all the way down and set it, right? So there are multiple ways you are doing it. The another way you can do is you can just get the count of records. So there are around 9,450 records. Sorry. So I can also use a function called sequence. There's a function called sequence, and how many rows you want? You want 9,450 rows, and you want to start at 1, and you don't want any intervals. You automatically get the data. You can see the 9,450 records got filled automatically. How do I make it dynamic? It is, let's say, here I'm just copy, instead of 9,450, I am now linking it to my data. So every time when data is added, every time a data is added, you will automatically get the records. Now you don't have any value here, right? Like now, just take a look at it. I'm just entering some more values. Can you see automatically the moment a value is entered, the incremental number got happened automatically? I'm just deleting it, the data is lost. So you can clearly see that using this function, you will get on a real-time basis whatever the value that you need to get, you will be getting that value. Okay, this is another function that you should also be trying for yourself. These are all new functions that has come. Now, sometimes you might have the data something like this. Let's say the data that has come to you, let's say the data that has come to you is in this fashion. Okay. Let's hypothetically look at situation where that user has sent you that, okay, these are the people who are working in the organization, and you have the data. Now you want them in all into a columnar format. Okay, you want all of them into one format. So there are into 3 columns, you want to get it into one column. So you can use this formula called VStack. Vertically stack the data. Stack this, and stack this. Automatically data is stacked, everything into one column, it has come. And you want to sort it, you can just apply a function called sort and close it. So the data is stacked and the data is sorted. You can stack it both vertically and horizontally. It's like you can do it in this way. You can use VStack. You can use something called HStack. So you can horizontally stack the data. So both happens. Now can you see the same data is there in this fashion, right? Now there is another thing where you have to wrap your columns. Okay, while you are stacking, so wrap. Sorry. So you want to wrap these data, let's say, into 2 by 2 cell. Okay. Can you see automatically you have wrapped this data, you have wrapped into this column into 2 by 2 rows. At the end, whenever the blank is there, what do I do with the blank? Do nothing. Or you can just say not applicable, not available. You can set whatever the things. Likewise, you can wrap your rows. You have the data in the rows, you can wrap it into one column. You want to wrap it into 2 columns, you can wrap it into 2 columns. Automatically, it has become a 2 by 2 data. So a data which is into a matrix, you can bring into a single line. A data which is into a multiple line, you can, a single line, you can put it into two rows. So you can wrap the columns or rows, you can stack the columns and rows. So this is a feature, again, people don't use it. So whenever the data comes, they automatically try putting it manually. Ideally, do it in a way you should be able to do it things by yourself. So what we have seen, if I have to just give you a recap of the data that we have done modeling of the data to Power Pivots. So we have created, instead of directly creating a pivot tables, we have made as models, model 1, 2, 3. To each of the model, we have then loaded the Power Pivot. That's what we have seen. And generally in the pivot tables, people want to see condensed data. So we have seen the condensed data by using two things. One, we applied slicers. Second, we applied something called filter. So data can be filtered and applied. When you have large set of data, the data needs to be indexed. You use a function called sequence. Automatically, the data numbering comes automatically. When you have the data in a matrix, you can put it into one single horizontal row or a horizontal column. If the data is in a horizontal row or column, you can wrap the data into a table format using wrap rows or wrap columns. There are more functions which I can discuss and add it, but I always feel that every knowledge, anything that you have learned, you have to put to use. There's no point in of accumulating so much and forgetting. And everything comes only when things go into DNA. Unless you practice whatever you have done, it doesn't stay with you for long. I would request people to start practicing and start exploring this feature called add-ins, where you can add in the data and get more information to it. This brings to end of the tech session. If you have any specific request of a new Excel function that you would want to learn or know, you can put it in the chat. I will cover now. If you have any doubts on the things that we have covered so far, you can again put it in the chat. I'll cover. Else, we can sign off for the day. Any questions to any of the participants? You can unmute yourself and ask. Was it too fast, or is it okay? You could grab something. You can type your answer in your chat box too. All right. So I would presume that you are digesting the data that you have got it. And just to sum up, that getting the update of GST, getting hands-on to various features of the Excel is the necessary order of the day. Python is already in Excel. In the earlier session, we have seen how to install Python libraries and work on it, how to use a Lambda function. We will explore little more in the days to come. With this, we come to end of the session. To all the participants, I thank you for joining on time. A special thanks to Jagdish and Ashika for doing the presentation. And thanks to Tarun for updating all of us on the Power Queries and Power BI reports. To all the participants, you will get a feedback of how the session went for you. Request you to all give your feedback, letting us know how it went for you and what are the topics that you are interested to know more in the future. Your feedback will always help us to make the sessions better, lively, and more value additive. After you submit the feedback, you will get a link to download the files. The file for today's session, the practice file, in fact, the file which I have worked, the Excel file, I'll share it to you, and the PPT of the presentation, both would be available for you to download, right? So these are the coverage for today, and we can sign up, and thank you everyone. Good day.